Why most traders fail. Listen to me. I've lived through more market crashes than most traders will ever read about. I've made millions, and I've lost them too. But through it all, I learned one truth. The market never changes because human nature never changes. Today, I'm going to tell you why most traders fail. Why 99% lose. Not because they can't predict price, but because they don't understand themselves, risk, or the very nature of profits. You may think you're trading the market, but in truth, you're trading your own emotions. Let's talk about that. 1. The root of failure. Most traders step into this business chasing excitement. They want action, fast profits, instant results. But the market isn't a casino. It's a weighing machine for discipline. When I began, I was just a quote boy watching numbers flicker on the ticker. Day after day, I saw the same story. The public always buys when they should be selling and sells when they should be buying. Why? Because people don't trade plans, they trade emotions. Fear and greed, those are the real currencies of the market. If you've ever felt that rush before pressing buy, or that pit in your stomach when red candles appear, congratulations, you're human. But in trading, humanity costs money. 2. Greed, the first enemy. Brief, greed whispers just one more trade. It tells you, double your position, you're on a roll. But here's the truth, every great bull market dies of greed. When you make money, the market is paying you to wait, not to chase another high. I've watched men make fortunes in a month and lose them in a week, simply because they didn't know when to stop. They mistook luck for skill, and the market always corrects that misunderstanding. Greed makes you forget that every dollar risked is a soldier in your army. And once you lose your army, the war is over. 3. Fear, the silent killer. If greed drives traders to overtrade, fear chains them to inaction. Fear makes you hesitate right when the opportunity is brightest. I remember the panic of 1907, prices collapsing, men shouting across the floor, telephones ringing off the hook. While others panicked, I stood still and watched. I realized panic is temporary, but discipline is forever. In today's markets, you see it every day. A sudden candle drop, liquidity spike, the herd running for cover. But when fear grips the crowd, clarity belongs to the calm. When your heart races, will you follow your plan or your pulse? 4. No plan, certain failure. Most traders fail because they have no real plan. They don't know why they're entering or where they'll exit. They buy because it looks right. They sell because they feel nervous. I used to say, it's not the thinking that makes money. It's the sitting and waiting. A plan is the compass in the storm. Without it, you're gambling, not trading. Every plan must have 3 anchors. Entry, where price confirms your idea. Exit, where you're proven wrong. Profit target, where you take money before greed takes you. That's it. Anything else is noise. In my day, I wrote my plan on paper. Today, you may use a chart or a spreadsheet, but the principle remains. Plan the trade, then trade the plan. 5. Over-leveraging, the death of good traders. In my era, we called it buying on margin. Today, you call it leverage. Different words, same poison. It gives the small trader the illusion of power, but illusion is not strength. Leverage is a double-edged sword, and most don't survive the first cut. If a 1% move can wipe you out, you're not a trader. You're a gambler dressed like one. When I built my fortune, I often traded small, sometimes waiting weeks for the perfect moment. Because the big move, not the daily noise, is where true profits hide. Leverage is like dynamite, useful in skilled hands, deadly in careless ones. Most traders blow up not because of bad analysis, but because they can't survive long enough for their analysis to matter. The impatient always fund the patient. 6. Failure to cut losses. The biggest reason traders fail, they can't take a small loss. They pray, they hope, they move the stop just a bit lower. They say it'll come back. It never does. I've made that mistake myself. Once I held a losing position, convinced the market was wrong. It wasn't. By the time I sold, the loss was catastrophic. It wasn't the market that beat me, it was my ego. After that, I made a rule that saved my career. The first loss is the best loss. Cut it fast, cut it clean. The best traders aren't those who never lose. They're those who never let a loss grow. Every trade is a soldier on the front line. When one falls, replace him. Don't send the whole army to die trying to rescue him. 7. Ignoring the market's message. Most traders lose because they argue with the market. They want to be right more than they want to be profitable. But the market doesn't care about your opinion. It speaks in one language, price. When price says you're wrong, listen. When it confirms your setup, act. I never traded on hope. I traded on confirmation. If the tape or today's candlestick acts wrong, it is wrong. Modern traders drown in indicators and news feeds, but the simplest and most reliable tool has never changed, price action. Remember, the market is never wrong, only your interpretation is. 8. Failure to manage profits. The irony of trading is this. Even when traders win, they often fail. They exit too early, afraid of losing what they've gained, or they hold too long, chasing a fantasy of doubling again. Both are errors born from emotion. The real skill lies in managing winners with logic, not luck. When I saw a trend confirmed, I added carefully, only when the market proved me right. That's called pyramiding with discipline. I never added to losing trades. That's throwing good money after bad. Profits must be managed like a garden. Prune the weeds early and let the strong flowers grow. Profit is not the reward for prediction. It's the interest paid on patience. 9. The final lesson, discipline over everything. In the end, the traders who succeed aren't the smartest. They're the most disciplined. They can wait when others rush. They can sit on cash while others gamble. They can follow their plan when others panic. Discipline is doing what you said you'd do, long after the excitement has faded. The markets will test everything you are, your patience, your courage, your ego. But if you master yourself, you can master any market. Because the truth is, failure isn't caused by the market. It's caused by the trader. The game of speculation is the most uniformly fascinating game in the world. But it's not a game for the stupid, the mentally lazy, or the emotionally unstable. Be patient, be disciplined, protect your capital, and maybe, just maybe, you'll stay in the game long enough to win it. Subscribe for more trading wisdom and timeless market lessons from the world of Jesse Livermore.